U.S. stocks staged a strong V-shaped rebound after a sharply lower open amid escalating global economic uncertainty. The three major indexes closed mixed, showing notable market resilience. Funds focused on the tech and energy sectors, risk aversion eased, and the overall trading presented a volatile recovery pattern. Next, at the close on March 2nd Eastern Time, the Dow Jones Industrial Average fell 73.14 points, or 0.15%, to 48,904.38. The Nasdaq Composite rose 80.65 points, or 0.36% to 22,748.86. The S&P 500 gained 2.74 points, or 0.04% to 6,881.62. The three major indexes dipped sharply in early trading, pressured by conflict news, then rebounded rapidly as dip-buying funds entered the market. The leadership of the Nasdaq reflected the appeal of growth sectors. Sectors saw obvious structural performance, with energy and technology leading the gains, while safe haven and cyclical sectors traded actively. Most large-cap tech stocks moved higher, with Nvidia rising nearly 3%, Microsoft up more than 1%, and Apple, Tesla, and Meta closing slightly higher. The recovery of the AI industrial chain boosted the Nasdaq. The energy sector was supported by surging oil prices, with ExxonMobil, Chevron, and Occidental Petroleum all closing higher, providing key support for the market. Defensive sectors traded steadily, financial and industrial sectors consolidated, while airlines and tourism weakened amid rising costs. Chinese concept stocks generally pulled back. The Nasdaq Golden Dragon China Index fell, and most new energy vehicle and internet names declined. On the macro front, the escalation of geopolitical conflicts in the Middle East triggered sharp market volatility, with crude oil prices surging and fueling concerns over inflation and the pace of rate cuts. The U.S. ISM Manufacturing Prices Index moved higher, reinforcing expectations of sticky inflation. U.S. bond yields fluctuated slightly, and the market remained cautious about the Federal Reserve's policy path. Corporate earnings expectations were stable, supported by the prosperity of the tech and energy sectors. Funds shifted quickly between risky and defensive assets to digest geopolitical uncertainty. Commodity markets fluctuated sharply, led by safe haven and energy assets. Spot gold rose nearly 1%, and COMEX gold futures surged more than 1.8%, with safe haven demand continuously supporting precious metals. International crude oil prices skyrocketed, with both WTI and Brent crude jumping over 6% as supply risks boosted oil prices. Silver corrected sharply under pressure from its industrial attributes. The US dollar index strengthened slightly. Non-US currencies traded in a narrow range, and global markets focused on the evolution of the geopolitical situation. Looking ahead, US stocks will remain driven by geopolitical conflicts, inflation data, and Fed expectations in the short term, with volatility likely to stay elevated. The tech and energy sectors will remain market mainlines, and safe haven assets retain allocation value. Operationally, balanced positions are recommended, focusing on high-prosperity tech and energy targets, tracking non-farm data and conflict developments, responding flexibly to market volatility, and waiting for sentiment to stabilize further.